Sending money to another country, it should be as easy as sending an email, right? But we all know it's not. It's slow, it's weirdly expensive, and the whole process just feels like it's stuck in the Stone Age. So today, we're going to dig into why that is and how a whole new kind of technology is finally stepping up to fix it.
I mean, if you've ever sent money to family living abroad or maybe paid an international contractor, you know the feeling. You click send, and then you just wait. And you hope. And a few days later, the amount that actually arrives is always a little less than what you started with. So what is going on in that black box?
Well, the problem isn't just one company or one bad bank. The problem is the entire foundation, the financial plumbing of the world. It's an infrastructure that was built long before the internet even existed, for a world that moved a whole lot slower than it does today.
Now, at the very heart of this system is something called SWIFT. And here's the single most important thing to understand. SWIFT doesn't actually send your money anywhere. Think of it more like a highly secure text messaging service for banks. It sends the instructions for payment, but the money itself, that has to take a much longer, much more complicated trip.
And this old system, the one built around these SWIFT messages, creates 4 massive headaches for all of us. We're talking about shockingly high costs, painfully slow speeds, a total lack of transparency about where your money is, and real accessibility problems for millions of people around the globe.
Let's just talk about cost for a second. The global average cost for a personal transfer is a staggering 6.3%. And that's because every single bank in the chain between the sender and the receiver takes a little slice for itself. Those fees add up like crazy.
And then there's the speed, or, the total lack of it. 3 to 5 business days. Why on earth does it take so long? Well, it's because your money is literally hopping between different banks in different countries, all with different time zones, operating hours, and manual compliance checks.
Okay, so this system is basically a relic. But what if we could just build a new one from the ground up? A system that uses the technology of today? Well, that is the huge promise of blockchain. And when you put the two side by side, the difference is it's night and day. This isn't a small upgrade. It's a completely different way of thinking. Instead of days, payments can settle in seconds or minutes. Costs can be slashed by 40, even 80%. That black box where your money disappears is replaced by a system that's real-time and totally traceable. And maybe best of all, the system never closes. It's on 24/7, 365 days a year.
This all sounds fantastic in theory, but is anyone actually using it? The answer is a huge yes, and it's really interesting. Let's look at 2 of the biggest projects in this space because they're tackling the problem from completely different angles.
On one hand, you've got Ripple. They're working with the big banks to upgrade their internal systems, kind of like giving them a new engine for large institutional payments. And on the other hand, you have Stellar, which is much more focused on us, on individuals, on everyday people sending money home and bringing financial services to those who've been left behind by the current system. So how does this actually work in the real world? Well, Stellar has this key idea called an anchor. And honestly, the best way to think of an anchor is like a bridge. It's a regulated company that lets you take your normal money, like dollars or euros, turn it into a digital version on the blockchain, and then turn it back into normal money on the other side. It's the crucial on-ramp and off-ramp between the old world and the new. Okay, to really see the power in this, let's walk through a super simple real-world example. Let's say Alice in the US wants to send $100 to her friend Bob in Germany. We're going to follow the money in both systems. First up, the old, clunky way. Alice tells her bank to send the money. But her bank doesn't just send it to Bob's. Nope. It sends a SWIFT message to what's called a correspondent bank. This is a middleman, and it takes a fee. That bank might then forward the message to another correspondent bank in Europe, which, you guessed it, takes another fee and handles the currency swap. Finally, it lands in Bob's bank, which might just take one last little fee for its troubles. So after all those hops, all those fees, and waiting for maybe a whole week, Bob gets about 85 euros. And here's the most frustrating part. Alice never really knew how much would arrive. The fees, the exchange rates, they were all hidden along the way. It was a complete guess.
Okay, now let's do this the new way, with Stellar. Alice uses a US anchor to swap her $100 for 100 digital dollars. She sends those directly to Bob's digital wallet, and this part takes about 5 seconds. The network itself is smart. It automatically finds the best conversion rate to digital euros. And then Bob just uses a local German anchor to cash those digital euros out into his regular bank account. Simple. And the result, within minutes, Bob has about 92 euros in his account. He got more money, he got it almost instantly, and all the tiny costs involved were laid out right from the start. It's predictable, it's fast, and it's fair. So what does all this mean for the future? Well, it doesn't necessarily mean we're getting rid of banks tomorrow. A better way to think about it is that we're upgrading their plumbing. Blockchain can act as this new, incredibly efficient settlement layer, a middle mile that connects all the financial systems we already use but makes them way, way better. And a really practical way this is happening today is with something people call the Stablecoin Sandwich. You take regular money, you convert it into a stable digital currency for the journey, you send it across the world in an instant, and then you convert it back to regular money at the destination. You get all the speed of crypto without any of the wild price volatility.
But this whole thing is much bigger than just making payments faster and cheaper. This technology is fundamentally changing how value moves around the planet, and that has massive geopolitical consequences.
See, SWIFT isn't just a neutral network, it's also a powerful tool of foreign policy, used to enforce things like economic sanctions. And that reality has kicked off a kind of global financial race. On one side, you have open, decentralized networks that are all about innovation and access. And on the other, you have governments that are racing to develop their own central bank digital currencies, or CBDCs, so they can maintain control.
This quote really captures the exact moment we're in. The global race is on to define the rules for the next generation of financial infrastructure. We are literally watching a battle to write the rulebook for the next 100 years of finance, and the stakes could not be any higher.
And that leaves us with the ultimate question. As this new technology becomes the new standard, who's going to be in charge? Are we heading for a future with open, permissionless financial rails that are accessible to everyone on the planet? Or is the future one of centrally controlled, government-run digital currencies? The answer is going to define the future of money itself.